Well, in contrast to the gold market, the silver market is obviously much smaller, but silver has also had an extraordinary run, pushing through $60 an ounce for the first time last week, a historic rally. Right now it's trading around $63, $64. What is your take on what's driven silver higher?
Yeah, in terms of traded value, it's about 15% of the size or value of the gold market, on a sort of weekly trade. But it's actually grown into a very, very significant investment market itself. And we've always referred to a gold-silver ratio, but there's more to it than that because there's such a lot of industrial demand for silver. And think back 10, 15 years ago, we thought that silver demand was probably dying off. So much of it was used for photographic film, and not many people use that now. But silver is in enormous demand for solar panels and for electric vehicles. So actually, silver has this whole new lease of life. And some people are now talking about a potential for a deficit in the silver market, in that there just isn't, it perhaps won't be enough silver to go around.
John, I do want to come back to the moves upwards, primarily in gold, but I guess it tallies for silver as well. On that central bank buying, I'm not disagreeing with you that there hasn't been consistent central bank buying. In fact, there's been consistent central bank buying over an elongated period of time. But we've got a chart up on the screen just showing where silver has come from. Gold too spent a long time between $1,500 and $2,500 as well, when that central bank buying was still ongoing. What I was trying to say is actually that's been consistent, and no one was thinking, oh, I must buy gold then. Whereas now we have the same consistency of central bank buying, but now there seems to be a frenzy about getting on top of that trade.
Well, we think that the central bank buying has actually ramped up a lot. We think that China made a really big move to switch away from dollar-based treasuries, dollar-based other holdings, and move much more aggressively into gold. And we think there's a whole bunch of central banks that followed that. And yes, you're right. Other investors have got in on the back of the trade, and why not?
No, fair enough. John, where are these two commodities going in 2026?
Well, I think we've got very strong floors underpinning these prices, and because of that strong floor level, something around $4,000 an ounce for gold, that says to me the risk is on the upside. So better it's quite a good market to play in. Yes, it looks like it's having a reasonably strong end to 2025. It does look like we're going to carry on pushing higher. It's quite possible we might be seeing $5,000 per ounce for gold.
And silver?
Silver, if gold goes anywhere near $5,000, silver is going to punch straight through $70 an ounce.
So you talked about the deficit in silver as well. What about the supply response, though, as well? I mean, as we used to say in the oil markets, the cure for low prices. The cure for high prices is high prices, i.e. at these levels, even with the cost of production, which I'm looking at, for instance, gold, I think you're talking about $1,600 a troy ounce. Actually, there will be a lot more supply coming on board as people revisit their production levels.
Yeah, it's not like that with silver. Silver is mainly a byproduct metal. So you get silver when you mine copper, you get silver when you mine gold. There aren't that many pure silver mines in the world. So it's quite hard for the supply side to specifically react to higher silver prices. Yes, higher gold prices will start to draw in more supply. But there aren't that many new mines in the world, and it takes such a long time to plan a mine, to find a mine, to develop a mine. The supply side just can't react this fast. So next year, I think, is a bit of a home run for these metals.